You can't just cut off life support for 35 billion people, and you also can't just give everybody all the money in the world. It doesn't work that way. You can't do both.
Bear gang till I die, ho. Swooped up the homies and we about to start a sideshow.
This is the perfect storm. So the concern comes, all right, supply chain disruptions. What's a supply chain? All right, so basically you've got, okay, Asia, okay, and the USA. All right. So a supply chain is basically, in the most dumbed down fundamental way that I can talk about it, is imports and exports. What we bring from them and what we send to them. Now, this is all over the world, but I'm going to talk Asia right now just because it makes it a little bit easier. Okay. So what is a supply chain disruption? A supply chain disruption doesn't mean that a volcano in the middle of the sea, okay, erupts, and now the ships can't get around it. That's not what I mean by it. I mean, technically that's a supply chain disruption, but that's not the supply chain disruption I'm talking about. I'm talking about the normal flow, okay, the normal flow being disrupted. What could disrupt the normal flow? Pandemics, political tensions, tariffs, etc. Okay? So a lot of things can disrupt the supply chain. Now, what are some things that could do it? Or you could also put in a backlog caused by these or other reasons. Okay, so where could we get a supply chain disruption? Why would that happen? Well, lots of different reasons. In the fall, the expectation is that if we don't have a vaccine, which we most likely won't, there's going to be an abundance of continued issues. But it's not so much, and this is according to the medical experts, not me, it's not so much that we're going to see a huge spike in COVID cases. It's all the other things that come in seasonally with COVID still happening. So you've got flu, you've got the cold, you've got allergies from, different pollens and different things happening there. You've got so many different things that already cause a massive increase in hospitalizations and care. Add that in with coronavirus and people thinking that their cold could be coronavirus. Plus, you've got a backlog in the hospitals of COVID. Adding in all this, that's the concern, that we're going to see a massive backlog in the health sector. Okay? So that's one thing that can cause economic downturn, that can cause other problems, all right? That could cause this, supply chain disruptions as well, because I'm not just talking about supply chains for the PlayStation. I'm talking about supply chain disruptions for other things. You know what I mean? Sometimes governments will put in higher orders for medicines or for medical equipment, which will actually cause certain countries to not ship out, consumer goods because they need to push out medicines or medical equipment or other things, right? Other supply chain issues. We have a trade war that's been going on. You've got an election coming up. What if, there's concerns. What if Trump gets reelected and goes straight for China again because he doesn't have to worry about reelection again? Or what if Biden comes in and puts sanctions on? There's concerns there. There's several reasons we could have supply chain disruptions. Another one is a backlog. Okay, a backlog due to the fact that I don't know how they're going to do Black Friday with social distancing. Okay, I really don't know how they're going to do this because they're not going to be able to. So the question is do a lot of these electronics that we generally would see a lot of people buying in person go fully e-commerce? Okay, so now let's say, for example, the PS5, which Sony is big on right now. What happens if there is such a backlog on orders here, okay, that not only can they not get here in time, but what if tariffs happen? What if trade tensions happen? What if medical emergencies happen? There's so many what ifs right now. So some of these firms, and all of this was to get to one point, was that some of these firms who bought Sony here, wrote it up to here, and now they're like, you know what? I don't really feel like dealing with this uncertainty. I'm going to take this profit and I'm going to sell. So that's kind of why you're seeing some of these firms start to drop their positions. But let me give you a TLDR of what I was telling you guys this morning. Okay, what I was telling you guys this morning that I was expecting. Okay, this is the bank, okay? The bank lends out money to individuals to pay for a house. Okay? Most Americans don't have $300,000 to $400,000 in cash, so they have to mortgage a house. How do they mortgage a house? Basically, the bank gives them a loan. They take that money and they buy a house. They owe the bank back that money plus interest. So they might take out a $250,000 mortgage and end up paying the bank back $500,000. So the bank makes a lot of money, okay? The bank makes a lot of money. Now, this is all good and well during an economy. In 2008, the problem is that the bank gave everyone a mortgage. Even if you worked at barely above minimum wage, the bank was like, fuck it, we'll give you a loan. We figure enough people pay their loans, we can survive the idiots, or not the idiots, but the people who can't afford it. If they default, it's fine. We're going to make so much money on the amount of payments coming in that it will cover our asses on the people who can't pay. But then the 2008 financial crisis came, and it started with the idea that so many of these people are underwater on their mortgage. They'll never be able to pay their mortgage back. And the banks are hiding this and repackaging the debt and giving it to other people and saying, yeah, let me sell you a debt, because selling of debt is actually a big business in America. You owe somebody $1 million, you only pay back $200,000. They sell that $800,000 to another company for $500,000. They recover some of their losses. Now that business only paid $500,000, and they're going to try and get as much out of it as possible, and it just keeps going and going. So they bundled it together and sold it off. Well, eventually, it came to light, and all of these people who were underwater lost their mortgages. But guess who really lost it? The bank, because now the bank owns a home that they can't sell for the price of it. So they're underwater. They lose trillions of dollars. In 2008, the government used tax money to bail the banks out and say, hey, listen, all that money you lost here, just don't do it again. We fixed it. In this case, the same type of thing is happening, right? The bank is giving out these people these mortgages. But now coronavirus, has come along and put 35 million people out of work. Well, Stocky, how come if they've been out of work, how come they haven't already lost their houses? Well, we had the federal unemployment stimulus, which gave people money. But at the same time, we did what's called the forbearance and moratorium, which means, hey, all of you people and everyone else in America, you don't have to pay the banks your money right now. We'll protect you. You don't have to pay the banks. Focus on other things. Well, most people who are getting the unemployment checks are not paying their mortgage right now because either A, they don't understand the importance of it, or B, they're thinking, oh yeah, I can just pay it later on, or C, they're legitimately focusing on issues they need to take care of right now. However, a moratorium is not a forgiveness. It is, we're going to take the mortgage that you owe this month, and this month. We're not going to charge it to you. We're going to put it at the end of your mortgage. So you're not forgiven. You just have to pay it later. So nobody has gotten, forgiveness. So what that means is these 35 million people, once this moratorium extends and the federal unemployment benefits go away, they still have to pay back on the homes. But if they're unemployed, they're not making money, they can't pay back their mortgages. Which means even though technically the bank didn't give it the mortgages to a bunch of people who couldn't afford them at the time, they're in a similar situation where they've got tens of millions of people that have loans, and not just homes, car loans, because when you get a car loan, oftentimes you get it from your bank. Credit card loans, which is credit card debt, which is loans, all of this. This is the idea. So the Federal Reserve has basically said, shit, we're not going to bail, the government's not going to bail them out again because it didn't go over well last time. What we're going to do is we are going, if this is the deed, to the house. This is the Federal Reserve. Okay? Normally, they pump money to the banks. The bank give them back money on repos. The Federal Reserve is like, hey, all of these deeds that are about to, all of these mortgages that are about to fall apart, instead of these people defaulting on them and now you owning a house that they're underwater on and you didn't get enough money back to pay for it, which means you now own a $350,000 asset, which is the value of the home, even though these people only paid you $20,000. Now it's $330,000. The bank doesn't have real estate agents that are out there buying their house. They sell that at a discount to try and get back whatever they can. They're just trying to save their ass because remember, it's a numbers game. So the Federal Reserve is like, hey buddies, we're just going to buy these. We're going to take these from you. So instead of this falling on your books as a loss, we're going to hold it because we don't owe money to anybody. We create the money. So it's cool. It's cool. We got you. And that's kind of what this is saying, is that they're going to try and protect the banks as much as possible. Rather than letting the bank crash and then the government bailing them out, they're trying to circumvent the issue as they did last time. And they're going to buy up these junk securities, these junk mortgages, and they are going to hold them. And then the bank can be like, oh, yeah, we've got this house that we don't have to worry about. That doesn't mean that we're going to be out. So what you're saying to yourself, well, Stocky, if that's the case, why is real estate going up? Why is real estate going up still if we're in this pandemic? Well, all these homes, no one's selling them. Because if you sell your house right now, a lot of people are trying to sell their house because they're trying to get whatever money they can before the market, potentially tanks next year. And so that's why you're seeing the price of them go up right now. Right? Because there's low inventory. Because most people are not selling their houses. There's a moratorium going on. They don't have a job. The last thing they need to be doing is trying to sell a house while looking for a job and trying to figure out what they're going to do with their money. So if nobody's selling their houses, that means the houses that are available, okay, are getting picked up really quickly at a high premium. At a pretty high premium right now. You're not seeing a ton of new homes being built right now because nobody wants to get stuck on a new home that costs $450,000 to build that's going to be finished next year when there's potential flood of other houses in the market, which means they're not going to be able to sell this for more than $400,000. It's already a loss. All right. So the idea is that there's a lot of scared out there, but this gives a little bit of stability. I got to say, quote unquote, stability from an investment standpoint, because basically the Federal Reserve is delaying the inevitable and making it seem they're protecting the banks. They have to protect the banks. Now, some people are thinking, hey, this housing crash is going to happen in urban areas. I want to buy up properties in suburban areas because there's a lot of idea that there's a big belief in a lot of circles that there's going to be a mass exodus from cities after coronavirus, especially with the fear of being close with people. Number two, so many more big corporations moving to work from home. If you're working from home, why would you live in the expensive ass, dirty downtown city full of people when you could move to the suburbs outside of the city? Okay. Cheaper land, cheaper homes, cleaner, nicer, better schools, and you can work digitally. So now there's a rush. Okay. All right. And so people right now are buying up residential areas, hoping that they can buy those houses and flip them before this potential pullback happens. They're trying to get all these people not fleeing, but moving from the cities into the suburbs now. And it's working right now because there is this exodus, it appears, from cities, urban areas to suburban residential areas. So that's why these houses are getting bought up. And you're like, why would anybody buy a house right now if this is potentially happening? Because they're not looking to buy them to live in them. They're looking to flip them right now. If they can buy a house for $320,000 and they've got 10 people moving, they could probably get $350 to $375 on that house in the short term because of competition. But if they can't sell the house, they might be fucked. This is very speculative, Stocky. I literally started this by saying potential. Like I said, the idea of what's going to happen to real estate next year is completely speculative. I agree that part is speculative, okay? All right? there could be a lot of things happen. We could get a vaccine and everybody could go back to work immediately, or the government could come out and say, you know what, we're just going to pay everybody a universal basic income forever, and that's great. But then when the inflation hits, that's when it's going to be really bad. So you have a very tough, from an economic, not a political, from an economic standpoint, it's a very tough situation. Do you give everybody money? A high amount of money for a long period of time to keep the spending going on, the economic stability going, the engine running, and people being able to buy. But if you do that and you continue to do that, you can't get away from core inflation. And core inflation will bleed even more so into real estate. So if you keep giving everybody a lot of money, then the value of things goes, or the price of things goes up despite the value not going up. So then you have to print more money to keep up with the ability to continue to buy, which then drives the price up higher, and it's a cycle. But at the same time, you can't not help people have basic necessities to live. So I don't care what side of the aisle you're on, if you look at what the current plans and ideas are in place, either side, they're both completely out of their fucking mind. Okay? You can't just cut off life support for 35 billion people, and you also can't just give everybody all the money in the world. It doesn't work that way. You can't do both. So it's going to be very interesting to see how this happens over the next 6 to 12 months. It really, really is. Who says that you can't keep printing money? Well, I mean, from an economic standpoint, and not political, but seriously, from an economic... Okay, core inflation. Not equity inflation, which is stocks, and not real estate inflation, which is housing. Okay, let's take those out because those don't really count. Your core inflation is the cost of goods and services, all right? There's different ways of measuring inflation. One is the amount of spending power, purchasing power versus amount of goods, right? So there's some people who have this misunderstanding of inflation. It just means more money means more inflation. No. It's about the amount of currency, the amount of spending, and the amount of demand for the supply. Okay? If you have an unlimited amount of supply and you give everybody a lot of money, there's no inflation. So there's this fallacy from people in the Austrian economic school of thought that says, well, if you give everybody more money, then the prices of everything goes up because they have more money and therefore it's good. That doesn't necessarily happen. Inflation occurs with supply and demand, both on the currency and on the goods and services. But generally speaking, if you give these three people, okay, let's say these three people all make $20,000 a year and they all make $40,000 a year. Okay, I'm talking about financials. I'm not talking about equity. I'm not talking about equality, any of that shit. I'm just telling you how financials work, okay? 20,000, 40,000, okay? For the general price of a good, whether it is food, okay? Whether it is cars, okay? Whether it is housing, okay? Well, let's call it rent. Let's call it rent. Okay? You generally have to find a market value. What is a market value based on? Two things. Income and supply and demand. Okay? Income, supply, and demand. All right? So if half the people make 20,000, the other half make 40,000, okay, let's just for the sake of simplicity say things are priced in the middle of everyone making 30,000. Okay, so an average dinner is $10, an average car is $18,000, and an average rent is $1,000 per month. Okay, now let's say we were going to do a universal basic income, okay, of $1,000 per month. You give everyone, I'm just talking about I'm not saying should we or should we not, but let's say we give everyone $1,000 per month universal basic income. Well, that means these guys now make 30,000. These guys make now 50,000. Okay? Well, if you base it on the price of everything before, it seems like these guys are doing a lot better. But that's not generally the case. Generally the case is now it's 40,000. So now this is 15. 27, 1.5K. So now the purchasing power is exactly the same because the value of things went off based on supply and demand, if that's the same as before, and the amount of purchasing power. And that's something that we get caught up on any side of the aisle. It's like, wait, how do we negate that? Well, Stocky, what if we just didn't give these people $1,000 a month, and it's not universal basic income, it's basic income up to a certain level? Okay, fair. But then where do you cut that line off? You could simply say, well, anybody making $20,000 or less can get $1,000 a month. Well, what about the people making $21,000 a year, which is only $100 difference? Now, these people have leapfrogged them. You know what I'm saying? So I understand that there's arguments on both sides, but what I'm saying is that you can't do either one. On the flip side, you can't go, well, 35 million people are out of jobs, and you know what? Based on unemployment, you can only pay them 50% of what they were making at their job because they need to go out and get a job, and I'm working, so these people need to stop sucking off the government tit. You can't do that because if these people don't have money to spend, then guess what? You don't have a job anymore because most of your jobs have to do with consumers. So both sides of what we're seeing right now, the way they're being proposed can't work. Okay? Regardless of the side of your aisle, not you, but regardless of somebody's aisle, everyone who thinks that they're right because either A, I'm trying to protect my children by not causing inflation, or I need to protect everybody and give everybody anything because everything is a basic human right. In the situation we're in right now financially, you can't do either one. You have to meet in the middle. You have to help some people out, but you can't give everyone everything. And that's the unfortunate economic situation that we're in right now.